What's up? What's up? What's up, everybody? Let's go ahead and take a look at a few things here before the market opens. We got 1 minute. There are two assets on the altcoin spectrum that I am looking at right now. Kava USDT, it's up almost 8% on the day. It's coming into an area of potential resistance. I don't know why this thing has been bouncing so hard lately, but it is. Nonetheless, you can see here, this is your weekly candle. It's a monster trading right into the 21 exponential. This could be an area where you see trend change. Obviously, if you get a close above weekly resistance, but you haven't even been able to get into weekly resistance just yet, as you are into daily res right there. There is the market open, so we shall see what happens. The other opportunity that I'm looking at is TRX USDT. The status is Tron. Basically, just on a technical basis alone, we have Bitcoin breaking down. This thing had a nice move to the upside. It is currently trending to the upside as well. But you can see that you did have a pullback this week, and now you have pulled back up. So this could be an opportunity to look for short entries after yesterday's big downside break. Came into support here, and that is basically why you're getting a bounce. So essentially, this is the range that I am looking to operate in from 0.069045 to 67116. Got a daily ETH level right there, aka supply zone. If you go into the hourly time frame, you can see you almost touched it to perfection. Also got an area here of hourly supply as well. Currently, you do have a small hourly breakout of the last hour candle. So we're going to closely watch this. Entries on this would be here. So give me 1 second. Let me pull that up. TRX. I'm trying to get it situated over here on the other platform so I can take a position on it as well. We've done really good, or I did really good this week. So we're gonna go ahead and play around on a Friday. See if we can't get into a position that pretty much holds over the weekend. We shall see. Got short pound dollar on the spike here during the news yesterday. We had the news come out, got a big nice spike to the upside. I shorted it damn near top tick. Just had my stop loss setting right over this bearish candle wick high, so entry is there, stop is there, and then you can see that ended up being a nice trade. Currently that thing is bouncing at a demand level here. Also coming into the daily 21, you will obviously get profit taking happening here. New longs will be taken here. But as long as we have the DXY running strong, running hot, then, we look for pound pairs, US, anything trading versus the dollar to go down. We were looking for NZD Japanese yen longs as of Sunday. And Monday we got a nice pop to the upside, and then all of a sudden NZD got super weak. So I'm not sure what that's about. Aussie bounced off of its yearly opening range. So here is the Aussie dollar currency, or just the Australian dollar currency. You can see here on Wednesday we traded up to the yearly opening range, got a little bit above it. We were just simply liquidating. As you can see, you've been in a range ever since you broke down broke down below the yearly open right here. All right. Then you can see that you set a yearly low with this wick. And then ever since, you've just been basically trading in a range from the yearly low to the yearly open. So this wick on Wednesday above this wick liquidated anybody that was setting in shorts. All right. So you can see that after the liquidation, also, this is a big, 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 big level. It is the yearly open. It determines whether or not the yearly candle is green or red. And currently it is red. So these are always good areas to look for short opportunities if you're trading under it and price comes into it off, and then the same from the upside. Anytime price is trading above your yearly open and it comes into it, you want to look for positions to the upside. That doesn't always work. The answer to that question is no. It doesn't always work. This is why we have to use stop losses, because we do not know what price is ever going to do. Ever. Ever, ever. So we are coming into the area where we're looking for Tron shorts. I'm going to go ahead and take a short entry now. I'm going to set my stop just up in here somewhere, just above the bearish candle. Obviously, the best place to put the stop would be all the way up there, but that would make your risk to reward much less, or you would need price to travel much further in order just to make a 2-to-1 risk to reward. And that's typically all we're looking for, right? We go into the entry. We already tagged it. If I go to the 5-minute time frame here, you can see on the last 5-minute candle, we pushed up to it. So that is entry right there. So now what we want to see is we want to see an instant rejection. We want to see price trade away from this level. And so far, so good. My entry is setting at 0.06865. That is on the Bitget platform. If you are not in the US and you want to trade on the Bitget platform, there is a link in the description. Please use code XTSC. Wait a minute. I'm not even sure what my code is anymore because I haven't been showing it. Anyways, there's a link in the description if you want to use it or not. All right. So basically, we're just going to set and watch this thing, see if it falls down. In order to get a 2-to-1 risk to reward, short entry there. Like I said, you just want to throw your stop above, somewhere above the bearish candle, because if you get back above that, then there's a good chance, especially now that we're getting towards the end of this candle's lifetime. You got 22 minutes left on it. So if it were to get back above the open with, little bit of time left, then that could indicate that you're going to continue higher, which would be okay because we're going to eat a very small stop, right? Very small loss. You could look again for entries up here. They don't always pan out on the first go around, but you can see that, just down to the midpoint of your breakout or this big gigantic candle would give you almost a 4-to-1. And that's likely where this would trade down to based on just price action, right? Typically, the spread is always calculated on the midpoint. That is why midpoints of candles are useful. So not only do we use the high, low, open, and closes, we also use the midpoints. The midpoints are good areas to watch for support. If you're looking to get in a long trade, sometimes you will see that. And that's currently what we're waiting for on Bitcoin. If we go back over to Bitcoin on the weekly, you can see that we are trying to test, or looking like we are going down to test, the midpoint of this big gigantic breakout candle. So that's basically where I want to see support. As you can see, you also have the 21 exponential moving average, which if this candle closes here or anywhere under where it currently is, this should be under the line. If you go up and close like up around this area, then this yellow line will, or the yellow EMA will probably close above the actual support area that we're looking for. Once again, that is the midpoint of this weekly breakout candle. I don't want to see price get under that. If price starts to close weeklies under this 21, then that could mean that we're looking for this support down here at 21.8 and then ultimately the yearly opening range. So it's kind of brutally important for Bitcoin to remain above this line, as this is your trend, your current trend. It has done very well in the past. Once you start a trending condition, you hold that 21 on the weekly closing basis. Obviously, if you're in a choppy environment, it is going to chop you apart based, just trying to get in a trending trade, because, that's what chop does. It tears traders apart. So, and occasionally there are traps like this area here, but we knew this was going to be a trap because we knew this was also the yearly open test here. It was also going to set a fresh yearly high. That's where we were looking for shorts on Bitcoin. So we stopped the trending conditions down here. We were sideways, and then you had one last down move. That's a capitulation. And so far since, you traded sideways and then out of the range, getting back above this stuff, and also turning the trending indicator back to the upside. So that's all moving averages are. They are just trending indicators. As long as price is bouncing off of them and then getting bullish expansions, then you can consider yourself in a trending environment. When that stops, obviously you're no longer in a trending environment. Last time Bitcoin had a bullish explosion, it traded sideways for what? This candle, 1, 2, 3, 4, 5, 6, 7, 8, about 8 to 8.5 weeks. You traded sideways. We did the same thing here. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of sideways trading in this range. So dropping below, taking out that wick low right there would be sufficient enough for bullish continuation. All right, so if Bitcoin can get back above this line, this is your a low week. So that's a big, it's a big level. There are obviously the next daily level would be down here to liquidate. So this liquidation, and then down here would be the next liquidation. So Bitcoin could get a bounce here. We were looking to trade Bitcoin, a bounce on Bitcoin based on the 4-hour support. Obviously, we did not get an entry, or I did not get an entry. And also, if you look at your RSI here, from this swing low right there, you can see that broke oversold right here. And then this is clearly a lower low. Also broke oversold conditions, but is higher than that. So that is on the 4-hour time frame, bullish divergence. So we were looking for a current bounce here based solely on this liquidation and the 4-hour making a bullish divergence signal. So we were only looking for a bullish trade, day trade, but it did not come back down and give me an entry. Instead, what it did was it held support at this hourly support here. So if you would have taken a bullish entry right there, you would have been able to capture this move to the upside. Very small move, but like I said many times on this channel, the move does not have to be big if you use leverage. All right. But you don't want to use too much leverage either, because, you know, you can get, you can basically decapitate your whole entire account if it goes in the wrong direction and you don't have a stop loss set. And if you get under or just at 70% margin, your exchange will liquidate your total account. So very important to keep a stop when you're trading with leverage. I use higher leverage, but I am a more seasoned trader, if you will. If you are brand new, I don't suggest use any leverage until you get a consistently growing equity curve, or an equity curve that is moving to the upside. If your equity curve is going down, you do not want to use leverage, because that indicates that you are not a profitable trader, and leverage is just going to help that downward equity curve go down faster. In a sense. So you want to wait until you get that equity curve bottomed out and starting to trend in the upward direction, as that's when you want to start using leverage, because you have figured out something that works. All right, so currently on the TRX position, we are back to the open. Well, on the Bitget exchange anyways, we are back to the open, but on this here, it's showing a different thing. Now, obviously, this is trending up, so us taking a short position is against the trend. Now, the near term is down, right? The near term, this week, in a sense, is trending lower. This candle is just what I would consider a pullback. So just like in an uptrend, you have pullbacks, you also have pullbacks in downtrends. It's just the opposite. So in an uptrend, this candle would be considered a pullback, because you're trending up and then you pull back to support, wherever support is found, and then you resolve that back to the upside. Well, same goes for a downside move. If you're trending down, let me find a downtrend here, and then you get an up candle, that is a pullback, and then you resolve back to the downside. And this is simply what we're looking to get in on. We try to short these tops like this, all right? And the actual trade that we're taking now isn't as good as a setup as this one would have been, because on this particular setup, you were under the daily 21. So this top that would automatically set sell side bots turn on, essentially coming back into the 21, because it's a trending moving average. So you can write code to basically set trades for anything coming back in. And these higher time frame daily and weekly moving averages have more weight. In fact, I do not even look at moving averages under any time frame smaller than a daily. There's no reason to look at moving averages on a 5-minute or an hourly time frame, because you get chop. You're intraday. Intraday doesn't really matter. You're looking for the day, because if you get set up on a good trade like this on a day time frame, if it does end up working out, you take profits on the way down, and then you leave a little piece on to catch downside continuation. So you would have caught that entire move there after entering. And it's the same exact entry and trade technique that we are doing today. Exactly the same, right? But we're a little early, because currently, you haven't really broken. You have on one daily close under the 21, but it would be much better, or this setup would be much better, if we waited for, the moving average to actually rotate to the downside, because then you would have a couple more red candles. In my case, they're blue, guys, but the blue candles are down closing candles. The green candles are up closing candles. It's just the same. Pretend the blue is red. But yeah, it would be a little bit better if we waited. But sometimes when you get into a drop, you do not get a retest of that. We did here on Bitcoin on this day, but you can see you didn't really test the actual trending indicator itself or the exponential moving average. You fell short, and the reason you fell short of that is because people would have started hitting the sell button at 28,007, as that was your last daily support or your swing low, right? The reason we use candle closes as support is because most professional traders or a lot of prop firms and stuff like that, hedge funds, banking traders on bank desks, whatever, they like to just use the line chart, and the line chart is calculated on closes. So you can see this swing low here lines up perfectly with my support. So always use the candle closes, downside closes as support, upside closes as resistance. You can see here was a trap. If we bring this up to the highest closing bullish candle, could not close above it. You did close above it here, but then the very next day, boom. After liquidating this candle, boom. So those are great setups as well, but that's a little bit more advanced. This is as simple a trade as you can do, all right? Simple as you can get. It's just a simple trending short trade, essentially. And what we're hoping for here, or planning, is, like I said, it's exactly the same. We traded up to your Heath level, or AKA supply. We know this was supply, right? Because the very next day, boom, down. So as this candle was trading up, there was more sellers involved than buyers, because the next day you had a massive downside rip. So any pullback to this area would be an opportunity, but it doesn't always play out, which is why we got to use stops. And that will work almost identically the same on an hourly basis, since we know, even though this candle closed green, if we get, a big downside move here, we will know that that was mostly sell side and not buy side. I did not put this on. So here's your daily range. You can clearly see that most people are buyers in this asset, but coming into here is just a good opportunity. Like I said, we're just looking for a midpoint test. We're halfway there. And that's essentially how trading works, all right? You're just looking for those areas on the chart, those high probable areas, and those high probable times. We had the market open 9:30. That's when the stock market opens in New York. That's when the majority of your volume comes online. It's also the last session of the day. So you have your Asian, London, and New York session. So it's the last bit of volume for the daily range. So a lot of times you'll see reversals occur during the New York session or continuation during the New York session. So we'll see if this plays out here. It's the only trade that I've seen. Like I said, Bitcoin had already made its move. I would be taking profits on that already. Had I been able to get the entry, I did not. Like I said, I was waiting for 319 to be tagged during this candle right there, but it just did not get to it. So I did not chase price. In this instance, had I chased price, it would have worked, but I never chased price because I got bit too many times early on. So you can see you got a nice downside push on the opening bell here on the SPOOs. Here's the NASDAQ. Had an up move, then a down move on the open. 9:30, first moves to the upside, then now to the downside. So we'll see what happens with these markets have been trading so volatile with back and forth rips. The only thing that this can be attributed to is people are basically trading options at expiration, 0 days to expiry options. They're just basically picking up pennies in front of a steamroller, but it's a very profitable strategy, as if you sell, 1,000 contracts for a nickel, you can do that every single day. It's going to expire worthless that day, so you're just essentially picking up free money. That is what is literally causing this back and forth trade, right? Literally. So people are kind of concerned about that because obviously it's gotten more absurd. You get big rips like this. You should see downside continuation, but you didn't. Price ripped right back up and liquidated the top side of the range, then right back down, liquidated the bottom end of the range. So literally the only thing price has been doing since the last CPI print has been liquidating traders left and right. April the 12th was the last CPI print. That would have occurred at 8:30. So we'll just say right here, Alt V. That's when you had. So let's get rid of our horizontal levels and let me show you what I'm talking about here. This is the news. There's the swing high, right? We got the CPI print. There's your swing high. I got the other chart open on the other monitor, so I am watching it if you are in the TRX trade with me. And then after you made the swing low here, this is just after the news, just after the CPI print. You came down, you set a low, then you traded up, and then bloop, liquidation of this swing high. So now here's the liquidity, trades down, up, liquidates that swing high. So now there's the liquidity. And then price chops sideways, up and down, 0 days to expiry option trading. And then boom, you liquidate the swing low. So here becomes your new liquidation point. And then you chop, boom, set a new low. This becomes your new liquidation point, right? And then you go all the way up. Boom, you liquidate that. That becomes your new liquidation, then that, and then this right there. Then you just immediately switch back trend, come down, boom, liquidation above this swing low there. So now this becomes the liquidity, and here we currently are. So, yeah, you can see how the market has literally just been punishing trend traders to death. That is why my day trading strategy works so good in environments like this, because we know where the targets usually are, right? Now, here's the problem. We know that for the longer trade or the bigger trade on the SPOOs, liquidation is above 41.89. And then the next liquidation is 40.44. So obviously, wherever demand or supply or whichever ends up winning out, then that will be the target. Both of those areas will be the target. So it's just hard to catch it because it's not in a trending environment. Right now, you are currently struggling at daily resistance. So a daily close above resistance here, that would set our next target. Well, first target would be this swing high, but then this area there, that would be the next resistance. So we would assume price would trade up to that and then ultimately liquidate this, where you could then have a downside push all the way back down to there. And that's just from the last CPI print. This new CPI print that we got yesterday showed us that we have sticky inflation, but inflation did come down by 0.1%. So although it is sticky, it is still moving lower, which should be good for ultimately, it should be good because that means it's just getting closer and closer to the Fed's, their target, which is 2%. All right, this is the Fed target. You can see we went from 5 to 4.9, not a big tick down. So we do have sticky inflation, and a lot of people are saying that the Fed may end up having to move their target up to 3% or 3.5%, and we just might be moving into a macro higher inflation regime. But the Fed's 2% target isn't based on any scientific data point or anything like that. It is literally just, it's been the target rate for the Fed since just I think Volcker said we got it at around 2%. That's good. So basically, the Fed has just been trying to keep it at 2% ever since. So in and around the area is fine, obviously, but we're still trading, or we're still way off of that. And also, essentially, you have, what am I talking here? Let me pull up an asset that's been trading for a very long time. The SPX, the actual asset itself. Let's put it on auto, and then let's pull up this right here. All right, so this is your inversion, your 10-year inversion. This is what's got everybody bearish. It is the most inverted this has ever been, as far as this indicator goes. All right, as far as this indicator goes, it goes back to March to 1988, so that's a pretty good sized distance. But what I've found is usually the really big downside rip your bear market usually doesn't even really start until you get uninverted. I'm not sure if uninverted is an actual word. So if it isn't, I just made it up, right? Because that's how we roll over here. We make shit up as we go. Just kidding. Here you can see you did have a slight move down while the yield curve was inverted, but it wasn't until you got back that this dotted line is the zero line. That is your inversion. This line I have on the chart just was something I was playing with. So let me get rid of that. You can see this is when you get uninverted back to the upside. And then, that's when you really see, this is a monthly chart, ladies and gentlemen. So this is your inversion that occurred before 01, right? There's 01, your yearly open. Boom, price trades away. This is a monthly chart. So that is a big downside move that lasted for months and months and months. Right? So here was the next curve inversion. Notice the bear market did not start until the inversion was over. Once you got back above the inversion, that's when the bear market started. We come over here to the pandemic, all right? We still did get an inversion, and the bear market did not start until, boom, you got uninverted. That's when the bear market started, and here we are currently on the inversion. You are still at the 0.5-ish line, so you could see a bear market start Q4, or Q1 2024. That is if we have a recession. Now, this is something that people have been using for many, many years to predict recessions, and that's why they say that once the inversion occurs, it can be a year to a year and a half before you even see a recession based on that indicator. All right. So there it is. We don't want to see a bear market. So we'll see if we get that inflation down to 2% before we get uninverted. And then hopefully everything works out. But if the bear market wants to happen, we will be prepared for it for sure. Here is TRX. This is the current trade that we are in. did not quite hit profit target. So this trade could last for a little while. We'll see what happens. Talking about yield curve inversion, and a lot of people left. Good morning, everybody. What's happening? What's going on? Good morning, all. Crank the tunes. Who is it? That was Sync by Coma Svensson. Svensson. Coma Vincent. Svensson. I can't say the word. Sync is the name of that song, the first song. All right. Good morning. Good morning. Could you look at Adam, please? Yeah, we'll look at Adam as we're just kind of sitting here waiting for this thing to roll over. We could put it up on here. That allows us to watch it. We'll look at Adam down here. So Adam is currently trading into resistance. It's already hit resistance and has pulled back on the day. The 21 exponential moving average is currently above price. So, I mean, Bitcoin's in a downtrend, and most of your cryptos are going to follow Bitcoin. Not exactly or 100% inversely to Bitcoin, but they usually do what Bitcoin does, right? Ultimately, you can even pull up Pepe over here and see that it has literally lost over 70% of its move here. Let's get rid of these. It doesn't look like it. But if I go up there to the high and come down here, you can see you've lost 75% of your stuff. But you're coming into an area where, it could end up holding as support. Also, you just now got 21 days on worth of daily candles. So now you do have a small plot of a 21 exponential. You can see that it's coming right in line there too. So if you're looking to join the Pepe meme squad and jump on the Pepe gains train, you're off 75% of the all-time high. So maybe it is a place to look to buy a few Pepes. Don't do it with leverage. Obviously, it's so cheap. $100 bill would be more than enough to make you a millionaire if this thing ends up breaking out and going to all-time highs and going to even 1 cent. That would be like 1,000,000% return. So it is a meme coin. It's worthless. So we'll see how it ends up trading. Obviously, it'll go wherever people are buying it. Naturally, your people that invented it bought 7%. I think I heard it was up to 7% of the total supply. So they were the ones that did the dumping on these last two candles. Because if I turn off log, you'll see what the move really looks like. So it's pretty disgusting. But it did get very, very bullish very, very quick. This thing has just been trading for less than a month. I think it's only been trading for, 3 weeks? Almost a month. So on the close of this week, that'll be a month. It looks bad. It looks terrible. 75% though, that could be considered bear market low. We'll see what happens with it. Maybe it finds support there. I can trade it on the Bitget platform, so I might throw a little bit on it just to see what happens with it. If Bitcoin finds support based on where it was on that liquidation, then maybe this will start to move back up to the upside too. But I would only have an upside target of 191, 360, as that is where the last area of support was. So I would look at that as the area to, take profits. I don't know how big of a return that would be. Probably not much. A 52% return, that is not bad. Especially if you do got even a little bit of leverage on it. That would be good. But we'll keep our eyes on it for the next few days and see how it plays out. But Atom is just, it's doing the same thing. You got a couple days of a bounce, but that's only because you liquidated that swing low right there, my friend. You can see that low is the lowest low on screen. And that's for many days, way back in near the opening of the year. That was the lowest low. So you just liquidated that. People just take profits, you know what I mean? And then you have new buyers just sitting there. They just sit and wait for these liquidation zones to be triggered. Now we are currently trading up above the area I want to see it go. So it's looking like it wants to stop us out here. Pound dollar looks like it's getting to the back to support. So I'm kind of hoping that this continues lower as I got into that trade yesterday. But it is still in a near-term uptrend here. So it may bounce around here for a couple days. It's also coming into the 21. Obviously, it's been in a trend, but the dollar is heading back to the upside of the range that it's been trading in. And it's currently trying to break out. Remember, I said this wedge, this formation is considered a bullish formation, or people look for bullish breakouts to occur, as it is a descending wedge that is typically a bullish pattern. And then again, maybe it just liquidates this swing high and rolls back over. Nobody knows. Nobody knows what's going to happen with price. There's just not a trade to take on it right now, unfortunately. Can you do some trading on stocks? Not everyone has Bitget. Yeah, I do trade stocks, right? But I try to do that when I'm not live or answering a bunch of questions on the Discord or whatnot. But yeah, I do trade stocks. Absolutely. What stock would you like to take a look at? Here's the hot lists. Volume gainers on the day, percent gainers on the day, and we're going to get stopped out, it looks like. Yep. So it was a quick, easy loss there. Not all of them work. Like I said, that's why you got to use a stop and why you got to use very small risk. But what stock would you like to look at? It looks like Tesla has the most volume on the day. It gapped up this morning and is currently being sold off. It is in a downtrend as well. So for the first 5 minutes of the day, you can see that. Trading stocks, I do that on this platform over here. Let me pull this up over here. This is the stock trading that I take part in. Usually I like to trade options, but right now there is a big skew on the premium. As you can see, at the money calls and puts, there is a massive discrepancy between the prices. Now, this typically means when you see a massive discrepancy like that, when one side is way skewed to the upside than the other, is obviously there is more demand for calls than there are for puts. Now, we can't tell with this platform whether or not they are buying calls or if they are selling calls. It doesn't tell us what they're doing. But someone selling 25 days out all the way down into here, when it's skewed like this, that means there's tons of premium on the table. You could go all the way out to 32 bucks, sell that and make 33 cents. If you think, 25 days, that's not that far out. And then, people, you can also do it like this. You got 4 days left. Look at the volume, the open interest on these calls here, right? This is what I was talking about earlier with the 0 day to expiry options. Now this is 6 days or 4 days to expire, so they're not doing it here. They're doing it on the SPX and any asset that has 0 day to expire. See this? 0 days to expiration. So literally they're trading out of the money, selling out of the money premium that they know will not happen. 41.85. Is it possible that you get to 41.85 today? Yeah, but it's currently moving lower, so there's not such a massive skew here. There's a couple dollars worth of spread here. So it looks like your puts are being mostly played with here because the price is going up. And that's also because price is going down. But yeah, the SPY also has 0 day to expiry options as well. So today is obviously an expiration day. They just go way out of the money and sell the premium. Price is moving lower, so you would want to go to the call side, pick up a nickel, or even if you got, large kahunas, you could go to 415, sell that premium. But that's what's got a lot of price action analysts are saying that's the reason why we're seeing these jagged markets. But I generally try to trade options, but if, depending on the asset, the underlying asset, that will basically tell me if, the price of it, if I want to buy the underlying asset or if I want to trade the options, right? So here is your weekly range for this week on the SPY. You are literally unchanged on the week. There is where you opened the week, and here's where you are now. So 412, you're literally a couple dollars away from the open. Now there was a little bit of movement here, but this was based on CPI. But yeah, what stock would you like to look at? Tesla. So here's the this is the it looks like Tesla, that's probably the reason why Tesla is coming off, because it's hitting the top side of the expected move. This is not a magic trick here. This is just the calculation of the options expected move. You can get this by yourself. All you got to do is look for it. I have it inside of this community, the Thinkorswim community. It's just the expected move indicator. But also you can get it just by going to the trade tab, going to Friday. Next Friday is the 19th. So you would go to the 19th, right there it is. And if you scroll over here, you can see that there is a $10 expected move next week. So plus or minus. So wherever today closes, you go up $10, strike a line, and then go down $10 from wherever today closes. And that's how you get this indicator. So right now, the options market is pricing in what looks to be a higher move next week, but that's just that will change based on where today closes. But people will generally take profits when you get close to the expected move range. You can see down here that did not stop people. Obviously, you broke well down below the expected move, but then the very next day you pop back up out of it. So that was the expected range you broke down. So slightly moving up. This is your daily time frame. Over here is intraday. You're just moving lower. Let me go back to this over here so I can actually give you prices to watch. So you can see that higher high, you're making lower highs and lower lows now. So that trend is likely to continue. And essentially also you just close this gap right here. So naturally people are taking profits and you have new people setting sell orders. Now we'll probably see an expansion, or potentially see an expansion to the downside to close that gap. So the next area of potential support or bounce I would look for would be 146.41 to be a buyer. That's if this price holds. That's if this price holds. I don't think they'll consider this gap filled. I mean, you barely broke down to the inside of it, and that's where you got to bounce back to the upside to fill that gap. And I mean, it filled almost perfectly. Let's find some weekly supports. There isn't any. As of right now, that will be support until you get a breakdown, but that's still a pretty good move to the downside. Looks like it could end up being a trap if you get back under the 21. And then again, you don't have to go down. You can obviously keep going higher. Because you have already closed the gap to the downside. You opened up here. So this first initial move lower would be to just close the gap. So if you're going to see bullish continuation, you would want to see it continue from here up. But I don't know if it's going to, obviously. Today's Friday, so I don't know if I would even take a trade on it today. Right now, there's only a few stocks that are holding the S&P 500 up. If those stocks take a beating or start to get sold into, then you're going to see this thing fall. The Dow Jones Industrial is trading under the yearly opening. Well, right now it's trading just above it, but I mean, I knew today would have been a great trading opportunity on that. That would have been a beautiful sell on the open, a beautiful sell. This is the open, so I mean, you would have had to sell on the open. Down to there, that would have been a nice day trade. But we'll see if it ends up closing back above today or not. Sometimes the setup, a good setup can take multiple days to play out. Like our trade got stopped out, but you can clearly see that it is still struggling here. That's going to be resistance for now. So we'll see how it plays out. And then later on, maybe around 11 or 12 o'clock, we might have a better setup on this. If we do, then we'll take it. AMD. Excuse me. AMD. I love AMD as an asset. I do own a little bit of it in my portfolio, my long-term portfolio, but I've held it for many years, so it's not like, you know. Anyways, it came off hard with the bear market of 2022, like everything else. 66%. I was telling everybody to buy this stuff down here, man. I kept telling people Netflix and all these stocks when they were 60 and 70 and in Netflix's case almost 80% off. Like that is a deal, right? But now that has played out. So now we're just kind of seeing now what is going to happen. As long as Powell keeps raising interest rates, then you know people are going to be bearish. People right now, the majority of sentiment is bearish. Like I said, there's only a few tech stocks that are literally holding the marketplace up. If those tech stocks start to get sold off, then you're going to see the market come off, and it's probably going to come off pretty damn hard. And we talked about, you know, the pause, if he's going to pause or even cut rates, it would be under which context? What is the narrative of the pause or the cut? If the narrative is, well, we need to cut rates basically to keep the banking sector from failing, then that would be bearish overall for the market. If they're going to cut rates because inflation hits 2%, that would be bullish, right? But as of right now, these are very difficult markets to trade, not just for you guys, but for the pros as well. Very difficult market to trade. AMD looks like it was reaching to liquidate that swing high. It may still do it. As far as finding support, I don't really see an obvious one. This would be as far or as low as I would want to see it go, like next week. So like this is going to be your range for next week, 98.15 to 91.03. You do have a swing there. It opened and then sold off. Big gap to the downside based on earnings, but earnings was a beat. So even though they had a beat on earnings, you still sold off. But then the next day, it was bought up. Very difficult trading going on. But see that weekly resistance there? Right there. That's your highest close in this swing, right? In this swing. Look here on the daily. You could not close a daily above it. So that's resistance. What did I have it on? Was it that? No, I had it on something that it was like right there. The daily opened right there. So just a little bit above resistance. But immediately sold off. Had a little bit of a higher push and then boom, sold off. And then this is going to be your supply candle because it's a bullish candle and it's the top of the range. That's your supply candle. Wicked into it, almost into it, sold off. So it works a lot. It just doesn't work all the time. And then sometimes it does end up working, but we take the trade too early. So if AMD is going to continue up, it might stop here. It might stop dropping there. It's a little bit above this, so it could trade even all the way back down to that. But I definitely don't want to see it trading under 9103. If it's trading under 9103, I would look back to the bottom of the range, 8360. But that could take a long time to happen, so I wouldn't go crazy on out of the money puts on AMD. What did I say? All the way down to there. That's only if you lose that. AMD's expensive, 45 days out, 42 days out. The VIX has got me worried though, for sure, because I can't remember when I seen skew this bad. I mean, you're 32 days out from now, so a month from now, at the money put, which is $16, is 20 cents. An at the money call is $4. That is a massive, massive skew. And in fact, if I show you this right here, you can see hedging against volatility spikes. Open interest in VIX call options jumps to a 5-year high, 10 million contracts of open interest. And then you can see down here is the put open interest. So you're like right at 3 million. 3 million versus 10 million. So, I mean, that's showing you that there's clearly a lot of demand for VIX calls. And a lot of demand for VIX calls could mean that we're going to see a spike pretty damn soon on the VIX. Another one. But so far, even during the bear market of 2022, like $39 was the high, as high as it went. So they didn't buy VIX. They didn't buy VIX. They bought the dollar. VIX just rotated back and forth in a range. It's just an oscillator. That's what happened during COVID. $85. Insane. Premium is so expensive up there. You could have been selling $100 calls, but nobody knew where it was going to top out. It's been trading pretty much sideways between $20 and $16. So we could be seeing a spike soon. But even out of the money calls, like buying $21 strikes, it's still expensive. And you'd want to do that kind of far away, right? Because it could take a week, 2 weeks, 3 weeks for it to get up there. But $22 calls on a month out, $1.80. That's not bad. You could buy not 22, sorry, $21 calls, because there's an old resistance level there. This was just a bull trap. So that's where I would look for it to go to tops. So I would buy $20 or $21 calls, calls, $20 or $21 calls. And right now, a month out, $21 calls are $2.17. And that's literally 4 strikes out of the money. So we'll see. But there's a few stocks that are trading at all-time highs. You got Mickey D's trading at all-time highs. Let's see here. O'Reilly trading at all-time highs. AutoZone, all-time highs. That's pretty much it. ARK got killed. Roku also got killed. The problem with Roku is now other companies put that technology straight into the TVs nowadays. So, used to you buy a Roku so that way you could get streaming on your TV, but now the smart TVs have that application built directly into the TV. So that has a lot to do with the reason why Roku fell off. Now Roku needs to figure out a new business model. But I mean, it's cheap compared to where it was trading during the bull market. I mean, you're 10x off the highs. Almost. So that could be a thing, but it's considered tech, so it's not a value play. It's definitely a growth asset. We know Nvidia is doing good. Nvidia is one of the things that's holding the S&P 500 up. Intel not doing so good. Not doing near as good as Nvidia or AMD for that matter. Sectors, here's semiconductors. So if China invades Korea, there might be or not Korea, but where the semiconductors are, there might be a trade there. Taiwan, I think, is where most of them are built. So there might be a trade there. But I would assume that would cause this thing to go to the moon, depending on if the supply of semiconductors would be locked up. So that'd cause a lot of demand quickly. So there might be a play on this, but we have to wait and see. There's another one called SOX. It's also a semiconductor ETF, but you can see it trades pretty much the same as SMH. SMH is just a little bit cheaper if you want to buy and own the underlying. It's the same thing. It's just the Van Eck ETF instead of the iShares ETF. Real estate is down. XLV is down. Let me put this on the regular chart. This thing did just a stop run, and then basically it looks like it's going back down. So this still could end up being a trade later. Let's check these out real quick. There's tech. That's literally the thing keeping mostly tech. Communications are both trading above their yearly opening ranges, and they're both trading on yearly highs. All right. Communications, tech, trading on the yearly highs. Consumer discretionary, up on the year. Energy is down. Financials are down. Materials unchanged on the year after being up. There's your industrial, no good. Consumer staples trading up, pretty good, almost at all-time highs. I'm not sure if or where McDonald's is trading, but be interesting to find out. There's healthcare. It's down under the yearly opening range, so it's down on the year. We know real estate is down, but trying to maintain right there around the yearly opening. Utilities is down. So those are all your sectors. There's just a few of them that are up, but mainly tech. Mainly tech. Also, if you just look at the S&P 500 on a daily closing basis, this is what it looks like. US 100 and NASDAQ, which is mostly tech, looks much better. In fact, you broke out above resistance. So probably a lot of short setting above that swing high right there, if I had to guess. So if we could get above that, then you could see a nice big bullish rip. But the S&P 500 was looking good a week or so ago, closed on the highs and above resistance, but still trading in a 5-week, 6-week range. So, yeah, not looking so hot. It's definitely losing its momentum, with still a huge, huge upside target of 41.94. That's essentially where, if we could get above 4,200, I think it would see a big bullish rip, because that would also bring in new investors for sure. New investors would jump all over it simply because that's pretty much the line in the sand. But I mean, some of us can't partake in the trades unless we have Bitget, unless you will trade stocks too. I don't know if you're in the Discord or not, but I really don't post the stock trades that often. I don't post the trades pretty much. Like, it's not a signal service or nothing like that. It's just when I see an opportunity or if I see a setup, then I'll post it. Or if I'm live and there is a setup, we'll take it together live. There's nothing set up today. The only two that I liked were this, and unfortunately they were altcoins. There really isn't any stock that I loved, like I said. And I don't do much of the penny stock trading anymore. I've been doing a lot more. This thing's up 1,000%. That must be a buyout. Yeah, no, it's a reverse split. So never mind. It is not up 1,000%. It just did a split. GSIT's up 104%. So this one could have been traded. But now I wouldn't be looking for a trade on it. With the penny stocks, they're so volatile, and it's difficult to manage risk on them, especially when they're up like this, 100%, 111%. And then SPRY is up. 31 million shares have been traded. This probably is not a low float stock. Because it seems to have decent liquidity. It's got a lot more liquidity in it today. Obviously, something happened. Earnings. DRMA, it's just coming off. BLBD. I mean, you got to be quick trading these things. You got to get in, get out. In, get out. And you're just looking to make like 10 cents, right? So, but you would also need to know where clear and obvious supports are. Like there's a resistance right there at $3 and a penny. An old swing low there at 331, but it's all over the place. I don't know what news or anything has got this thing rocking and rolling, but it is up 107%. Like I said, I don't know how many shares this thing has, but it's traded 31 million shares today. Tesla so far is leading the markets as far as volume. 53 million shares. That's based solely on yesterday's news, probably. Elon Musk said yesterday that he's going to have a new CEO or a new boss for Twitter, so might be worth buying Tesla here. Right? Based on the news. So basically, you just sold off, filled the gap. So yeah, I could potentially buy Tesla here. This is yesterday. This is when the news broke. Boom, boom. Right? That's where you closed on the day. So you traded straight down to the close of yesterday, and now you're starting to get a little bit of a bounce. So maybe you could buy Tesla. Today's Friday. You could get expiration options today. You could buy, but these do $3 apart or $2.50. Every strike is $2.50 higher. So, but I mean, 57 56 cents for a 175 strike call. Right there's 175. So if it's going to continue up based on that news that Elon broke yesterday, I could do that. I could buy that. That's a small risk, man. That's $57 for one contract. You know what I'm saying? You could risk $57, maybe make $200-300 on it if it does go higher and break out, right? But it would be based on the news yesterday. That is good news. People think that Elon Musk has been paying too much attention to Twitter and not Tesla. MPW long at 817 or less. Let's go look at it. MPW. We've looked at this thing before, obviously, because there's lines up there. It looks like it lost it. You're trading at 784 right now. MPW. There's options on it, weeklies even. What strike are you looking at, Brian? Looks like it's breaking down, broski. There is your Heath level, though. So you could get $8 calls. They're cheap, too. No matter, I mean, you can go way out, and they're still cheap. Cheap as hell. There's a massive spread, though. 28 days out at the money call is 50 cents wide, the spread. I would try to get an option at like 60 cents. See if you can get it filled and just buy the $8 strike. Buy it 28 days out. Like I said, try to buy it inside of that massive freaking spread. A 50 cent wide spread is bad. It's actually more than 50 cents. It's 53 cents. Oh, 56. Something like that. 7 days. That's closer. I mean, $8 is 26 cents. It's got a 2-cent spread. So the 7 days away expiration, you could buy it there. Right? There's your $8. That's a 7-day out. Remember, you're looking for the $8, thinking that it's gonna bounce now based on the Heath level. Just getting it in the money would put you probably up about 40 cents, 30 cents, 35 cents. I don't know. $8.50 is up here where it opened. That's even cheaper. $10 you could buy that one contract of that. But 7 days out, it's unlikely you get up to $10 or up that high. And then here's your June 9th, 28 days out. So, like I said, the spread is terrible. 47 cents, 96 cents. This is the trade. This is what you would have to pay to get filled now. But if you put in like 70 cents or 75 cents, maybe you could get filled in the middle of the spread. You would want to go closer to the 90 cents though. I don't know. I mean, it's at a weekly demand. Whether or not it bounces at that demand is another question entirely. All right, it looks like it is trying to bounce. You did liquidate this weekly low as well. So if it is going to continue to bounce or go higher and get up into this region, 989, it should do it from there. Oh, you're buying shares. Yeah. I would just figure out which way is cheaper and go that route. So it might actually be cheaper to buy the shares. But the options would obviously give you more volatility as they are priced. I mean, today, for a fact, right now, you don't want to buy today's options because you're going to pay 204% worth of implied volatility. So for some reason, there's a lot of movement today alone. So that has jacked the premium up to 204%. I would probably sell on today's expiration. Oh shit, never mind. They're literally 750 calls. You would only get 4 cents or 3 cents. And 750's all the way down here. And there's no money on anything any lower. The volatility is jacked up. $200 implied volatility. If it starts trading sideways, that will go down dramatically. So the premium you paid. But next week and the week after, like I said, the implied volatility goes down. You're in the 75s and 72s. So yeah, buying the shares would probably be the right call. Anything over 50% implied volatility is a little expensive. A little expensive. I'm not on Discord, just follow on Twitter and your live streams. What I'm saying is you usually only look at FOREX or crypto during the lives and you don't look at stocks. Most can't take a Bitcoin trade on here unless they buy Mara or Raya, etc. We want stocks for options trades too, please. Maybe get more viewers too if stocks live. Yeah. Yeah, we could. I do trade stocks and options. We'll see. We'll see. I'm not really worried about the viewers though. I mean, the people that come most of the time are the ones that, they're looking to either learn how to trade or they just come to support, right? That's basically what I'm trying to do is teach people what to look for, how to look for opportunities, how to identify them. Because that's what most new traders struggle with, is just identifying trades. But yeah, I'm sure if I was started doing options and stuff on normal days, probably do all right taking trades. I just know there's a lot of people that won't like Bitcoin. most of my followers are Bitcoin related, because when I post stuff like stocks, anything that have to do with stocks, even on the Twitter, it gets a lot less yeah, it gets less stuff, like less people look at it or like it even. Like here, 41 days out, the VIX skew, like this is important information right here, because it's showing the fact that there's so much demand for VIX calls that needs to at least make people think that, damn, you know what I mean? We could be looking at a recession. A lot of people are investing like there's going to be a recession, right? That got 3 likes. 673 people viewed the freaking thing and only 3 people liked it. So when I do stocks, I don't get as much engagement. There's 28 likes on the S&P 500 on this, but yeah, we'll see, man. We'll see. I know I got people that follow me that trade stocks. I have no problem with it at all. I don't have most stocks on this watch list. This is just what I'm watching here, but I got all of the other stocks over here. There's not a whole lot to do right now except for like either sell calls, out of the money calls on something like Facebook. That's Ford, never mind. Here, Facebook. Like this thing has just been on a freaking tear. But it's right under this massive gap here. So I'm a little bit concerned about selling calls anywhere in this gap right here. Right? I don't know that this gap will get filled now, and it doesn't have to get filled now. It can wait until, 2-3 years from now before the markets get to the point to where they're back to normal before this gap would fill. Now that could happen for sure, but it makes it difficult. So let's pull up Facebook and look at the implied volatility. Oh, Facebook. I've typed, you gotta type meta, dumbass. Implied volatility is small on Facebook right now. It's under 50%. All right, so here's Facebook. Today, the volatility is up 51%, but that's because anytime you get a big move like that, the IV automatically goes up. Yeah, you can buy or sell. Be more prone to buy, even though the calls are slightly skewed to the upside. That's people buying the top, more or less. I would say you'd be better off buying out of the money, far out, like 49 days, maybe even further out. But 49 days is the last of the weeklies. Let's see what we got on the chart. Let's do this. We got weekly resistance right there. But you can see though, you started to find sell side at 238.62, which was last week's open. This whole week, literally unchanged on the week almost. The black line is the middle, right? Unchanged almost. Next week, the options are pricing it, which depends on where this closes. Wherever this closes, that's where this black line will be. And the green and red lines will stay the same distance apart. So like, for instance, if Facebook closes at 232 today, down here, 232, If it closes down there, then this will look exactly like this. It'll be, the green will be pretty much close to the same, right? The red will be pretty much close to the same. So you could buy like maybe 229 puts, $49 days out. These are $5 strikes. Whew, man. $229, $230. But that's at the money almost. Let's see. Yeah, still $5. Let's go 21 days out. Still $5 wide. That's all the strikes. I have all of them open, so they're $5 wide. That's why they're so expensive, and that's crazy. But Facebook can move, man. I'm just being a little bit conservative. Based on next week's. So it'd have to be 230 is right at the money. 225 would be way under what the options market is pricing in. And see, this is the problem if you buy premium. If you get another week like this crushes premium value. It absolutely destroys it because it's just trading sideways. But also by buying puts, if the VIX gets a bounce, that will make the implied volatility go up. So you'll make money on the puts if price starts to head lower and the VIX starts to go up at the same time. Your puts will explode in value. Explode in value. But like I said, they're $5 wide. But you could buy 225s. 21 days out. That's only 3 weeks. I would probably buy the 225s. There's a $14 move expected to happen in 21 days. So they're pricing in a $14 move. So from wherever it closes, let's say it closes at 230. Let's say it closes here at 234. So a $14 move would be what? $220. Right? So they're expecting, now this is plus or minus. It could go up $14 too. So buying the 225 strike would put you inside of what's expected to happen. And it would only cost you $300. to play. If you want to just to play one contract, $300. That's what you'd be risking. That in 21 days, price is going to be lower than 225 or at 225. You would need it to be at 223 in order to make money on this. But like I said, if the VIX goes up, you can make money on it just by the simple fact of, the implied volatility going up. But I definitely go further out. Because even, like I said, just 2 weeks out, it's still there. 2 weeks out, you get $2.50 moves. 3 weeks out, you should get $2.50 moves. It makes it a little bit easier, but then again, there's a lot of open interest at the $220 mark in 14 days. That's $11 is expected, so this is a terrible idea. Only $11 is expected. Remember that 220 puts you at 220 with the $14 expected. On the 21 days, $14 move is expected. And that's just if you get the direction right. That's the thing. If the direction is correct and it goes lower, that'd be a high probable trade, in my opinion. There's other ways you can do it too. You can sell other things to fund the trade if you don't want to risk that or whatever. But we'll go ahead and wrap it up. Yeah, my style of trading works on all markets. Maybe I'll start doing options and stuff like that on the live streams, but right now it's difficult trading the markets, right? Right now I'm sticking to what's working, and what's working is trading the ranges. It's hard to trade the ranges on stocks because a lot of them aren't ranging. Right? This one's just trending to the upside. So I don't want to buy it up here either because you just liquidated a massive weekly high. You see that? So, I mean, I think you could get down to 220. Remember, the Heath level is right here. So that's what I'm saying. If you're going to take a short on Meta, buy the $21 strike or the $20 strike 21 days out. That gives you 3 weeks to get there. From now, that gives you 3 weeks to get there. And that puts you above the Heath level. And it also puts you within that $14 expected move. So that premium will pay out good. If you get to, like, say, 219. Whereas you paid $2 for them just to get in the money one spot, you'd be looking at roughly around $6. So that's like a 3x gain. Right? There's no guarantee that it will be $6. But if this implied volatility goes up, it'll be more than $6 just to get in the money. But if it has a big drop, right? If it drops like well under that 220 area, and say it gets down here at 206, those puts will pay out big time. Right. We'll wrap it up there. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.